Hello, everyone. Welcome to another episode of Bitcoin Analytica. This is your host, Joe Saz, and today we're going to do a quick glance at what we have going on with price. It is a weekend. We had our weekly close yesterday, Friday evenings, and it looks like we got the majority of the action in that we needed to get in with a big move down yesterday. And I think we're probably going to be going sideways for the majority of the time until we maybe a couple spikes to the upside or something, but it looks like we're probably going sideways until the weekly open at the very least. So, Sunday evening. So looking at the chart, we have, what time was this? This was yesterday at noon. We had our big spill. So we did have our Friday fuckery, and we tend to get Friday fuckery because Friday is the print of the weekly close. So if you're looking at a weekly chart and you see the candles, all those candles end at Friday, end at 7 o'clock on Friday, 8 o'clock Eastern on Friday. So there tends to be a lot of, I believe there tends to be a lot of manipulation around that time, because that's when you can change the outlook of the weekly candle to make it a little more bullish, a little more bearish, or whatever you choose. So that's why I tend to notice the majority of Fridays tend to be a bit more wild, erratic. Now, alternatively, you have weekly opens, and we'll talk about that. Actually, we'll just talk about that tomorrow. So we had our big spill. We have a great support line here. Now, we also have a ton of support in the book. Now, it is dwindling. Things have changed. The market is almost appears to be shifting in general, more bearish. You can see here that we have a lot of support signals here in the 2nd of August, and that begins to shift pretty quickly here into more of a spotted support. Right now, looking at the aggregated spot markets, you can see that there's some absolute chaos going on right now. All right, there's basically a fair fight between buyers and sellers in the order book on aggregated spot markets. And in addition to that, it seems like perpetual markets have lost a lot of faith. There seems to have been a little drop off, a little couple falls there on that green line, and that represents the number of limit buyers in the perpetual markets. Being that they've pulled their orders, it's a little bit nerve-wracking, because if we get a dual band confluence red, then it's definitely bearish. And I don't think we should be bearish right now. We don't really have any reason to be, and even going sideways, losing the fight, let's say at greater than 30K, winning the fight above 29,000, that's not really bearish, I think, overall. I think that's just price discovery, and it's a totally legitimate market phase. So we just need to keep going sideways, I think, and uphold these support levels. And it's okay if we get beat down by resistance levels. In time, we'll be able to bash them. So that's what matters, is just to establish a long history of price discovery here, so that we can break these resistance levels with a little more confidence in the future. Looking at Bitcoin CME gaps, there is nothing right now other than our local CME gap, as we've pointed out just about every day. Local around 30,000, 31,000. Now Bitcoin on the daily, continuing on this downward trajectory. Looks like we're going to be aiming straight at support at the 128-day moving average. So this isn't great. I don't want to be testing all this stuff that's really taking time to angle itself upwards. But historically, the 128, even though we got chopped up here, it did support up over there. And the past few days, it supported here. It looks like once we broke above this level, it's been one heck of a fight to really stay beneath it for very long. So the 128-day moving average is our next line of defense. Let's hope a lot of traders have their orders there. And taking a look at silver, market's gone sideways. We have we just have a big indecision candle here, and followed by two sideways moves. So to be honest, that's okay. I'm sure that there's a lot of external variables going on that are causing either confidence or a lack thereof in the commodity space, in the speculative space. Maybe it's dollars being printed, and it's making companies feel it's making people feel that, all right, long story short, if you print dollars, you give them to CEOs of companies, CEOs buy back stock of that company, that inflates the value of the stock. It artificially creates support because it's money printed out of thin air and it's being used to buy an asset, right? So the problem would be a lot of these companies look like they're doing well when they in fact are not, and they're just getting free money from the Fed. So there's a couple things going on that could give rise to just general assets as opposed to commodities and things like Bitcoin. But we'll have to just wait this out, because eventually that money printer stops printing, and then we start to see the rise in these other assets. So anyways, everyone, I hope you have a great day, and I'll be probably busy today. Got the fights today, so probably won't be on, but maybe I have been trading, so maybe I'll just show some trades. But much love to you all. Have a fantastic day, and I'll be seeing you guys tomorrow. All right, everyone. Peace.